Welcome back to Cryptolytics, giving you a fresh take on crypto analytics. Today, I'm going to show you how you can potentially trade pockets of liquidity like the whales do. So let's swim with the whales. Okay, well, here we are with a crazy chart. And I'm just going to start with this and explain what all of this stuff is on the screen. I know that this might be a bit confronting to look at, but if you look at it enough, then it starts to make sense. Like all of this sort of stuff, right? So I'm going to start off with this and show another perspective on the same thing. So I'm going to tell you what's on the chart first. So what we have here is this is the Binance Bitcoin USD perps chart. So Binance is the most volume and open interest out of any other exchange in terms of perpetuals that is leveraged Bitcoin contracts. So this is the best one to look at when trading this kind of strategy, because you really want to see what all the big money is doing and go from there. And the other one I'm going to show you in a minute or a few minutes will be an aggregated version of this. So you might be wondering, what's the deal with the color of these candles? Like, why are they orange and green and blue? And well, you can't see blue yet, but I'm sure we'll see it at some stage soon. But what we're looking at here is we're looking at the heat map. So this is the stochastic heat map, which I really like because it shows us when things are overheated and overcool. I don't think that's really a term, but we're just gonna call it that. Oversold or overbought, I think is probably a better term for it. So that's what we've got in terms of the colors of the candles. So it's good to, you're basically looking at when a specific point in the trend is overheated or when it's oversold, overbought or oversold. And also you're looking at here are these little green boxes I've got are just sort of liquidity zones, and I'll show you how I found those. So I'm just going to hide those from the chart for a sec. So hide all drawings. Now I'm using these indicators by Leviathan to work out a few things. So Leviathan has this liquidation levels, which is akin to, if you ever have heard of High Block before, they do this as a paid service. Now this is free. And the way it works these hours is it uses cumulative volume delta to work out. So if there's a high volume candle, then it works out roughly what the 50x, 100x, and the 25x liquidation points will be, which will be most likely points for liquidation hunting. So just so you know, this is a counter trend trading strategy and it's used on low time frames. So we're gonna have a quick look at the indicator that's showing the liquidation levels. So I've got these settings. It's using open interest and volume to work out the liquidation levels. You can also use open interest and CVD. I'm gonna stick with open interest and volume for now. And as you can see here, it's puts these bubbles on the chart where it thinks based on the volume, these liquidations will be, and the bigger the dots, the bigger the volume, so the bigger the liquidity pocket. So 25x is blue, 50x is yellow, and red is 100x. So they're usually the first to get taken out, and then we go from there. So that's it for that. And what else is on the chart? Well, these green dots and red dots are high points of buying and high points of selling. So if you see big green dots, that's where you know that there's a lot of potentially trapped traders in these zones. So most likely price will move away from that in the opposite direction and then start taking out liquidity, right? So we'll just show this particular range here, which is the most recent run up. So as you can see, like this was pretty crazy. This took out all of these points. I'll show you this in a minute. Lastly, on the chart is I have the open interest profile. Now I'm sure you've heard of the volume profile before, which shows at certain price points where high amounts of volume have taken place. This is open interest. So open interest is the amount of leverage positions that are open, or for green, it's open positions at a certain price point, and red is closed positions at a certain price point. And this is another Leviathan indicator called the range analysis. So this range analysis, you can sort of move it around akin to a volume profile. This would be a fixed range volume profile. There's also dynamic range volume profiles, but one's fixed. So you basically just select the slither of time you want to work out. So you can see a lot of positions open there. So that's likely a point where price will come back to collect liquidity. It could also act as support and resistance. So Now, the reason why I put those boxes on the chart before is this to work out where pockets of liquidity were. So the way I did that is you can see here these mass of blue dots here. Well, those are all liquidation levels to the downside, right? And in terms of to the upside, we have this box here, which I started drawing here, and then I finished drawing here, and then extended it out, and you can see that was collected, and you got these two big buys here, which was a good point for reversal. We got red candle here, overheated, big buying up here, so now potentially trapped longs, and more fuel for a downside move. So what happened there? Liquidity was collected, so price went up, collected liquidity, took out the 100x's, took out the 50x's, lots of big buying stepped in. The candle is red, very red, which indicates things are overheated. You can see down the bottom here is the stochastic heat map, and then trapped all of these longs and went straight against them, creating a fair bit of sell pressure to the downside to start collecting this liquidity zone. So the other thing I've worked out for this liquidity zones are, I worked this out from here. So I started here because for starters, there's a big pocket of liquidity here because of the open interest profile has a big spike here in the delta. So positive delta change indicating that a big spike up has taken place in terms of large amounts of positions opening. So that's ranging from here to here. And basically that's where I started it. And then I ended the liquidity pocket down here, which is basically the remainder of these 50x positions down here. And then that's pretty much it. So this one here was measured from here because of these candles here basically, but you can see that's already been sort of taken out. So we do have some more liquidity to the downside, and we have some above as well. So we've got either side still yet to be collected. I would say there is a lot more to the downside because if you have a look here, these lines indicate all of this is pockets of liquidity. However, when we look at the open interest profile, we can see that positions have been closing off around these levels. So there's a chance that the ones that opened up here, if they opened up long, maybe they're still holding onto the positions. And if price comes back closer to them, they might end up closing their positions, creating more selling pressure for a bigger move down. Now, that's all well and good, right? I want to show you how you can use this particular thing because Bitcoin enters these ranges, right? For long periods of time, it enters these ranges where it just gets stuck and goes sideways for long periods of time. And then you're like, what the hell can I even do here? Probably not much. Well, that's where stuff like this can make you a master at playing the ranges. Now, if you're using this, you've got an edge that other people just can't see. So you know exactly where price will most likely gravitate towards, because price often will gravitate towards liquidity. It needs to hunt that liquidity in order to fuel big moves to the upside and downside. There's a lot of money in Bitcoin, so it needs large amounts of selling or buying pressure, be it forced via liquidations or stop losses, and also just buyers entering the market. So let's have a look here at all of these big green and big red dots and match them up with the stochastic profile here. And in a minute, we're going to match them up liquidations as well over on the Aggr trade chart. But we're just going to look at this for now and go from there. So let's just look at the color of these candles. Okay. So we can see the stochastic heat map is predominantly blue from top to bottom. Look at this strong blue candle here, very dark blue candle here with large amounts of sell pressure here. So big orders have sold. You've got big shorts sitting down here. So where is the liquidity? If you think about this particular move here, the liquidity is obviously above because we have a massive shift in delta, cumulative volume delta, indicating there are a lot of shorts sitting in this region here. So again, there's quite a bit of volume here. So that's why it's printed these levels, because it detected a fair bit of volume here. And so what we get is this blue candle, a few of these red dots. This is a good opportunity to take a scalp long to the upside and probably sell into a mass of liquidity. Now, you don't really have anything yet. You could probably just, if you did open a trade here, or you waited for this blue to close out of the blue, or here maybe, I don't know, it's up to you how you want to use this. But For me, if I saw this dark blue candle coming back out, maybe that's your confirmation to get into a scalp long. And then you're waiting, and then you see this big amass of moves here. We have this big green dot, which means large amount of buying pressure, right? And then another big green dot, and you can see just all of this liquidity getting gobbled up, essentially. So as it starts to print all this stuff on the chart, so for starters, you've got this here, and you're anticipating a revisit to this particular liquidity pocket here. So say, for example, if you're like me and you make these squares on the chart, you're expecting here to here to most likely get eaten up in terms of the liquidity. We're just gonna talk about it like it's food, apparently. So once we get to this zone and a lot of this liquidity is eaten up, like a pizza, it's tiny little pizzas here. So once we basically reach this zone, we know that there's a chance that a strong chance we'll get a pullback, especially if our stochastic heat map is very red. So our candles, very red here, but we still have this liquidity pocket to the upside. So do we hold or do we close? Well, I would probably hold still here, especially when you got these big green dots. Big green dot, it means there's more and more potential for trapped longs. So this is all buying. It absolutely nuts with the CVD is just going very much positive and shifting. So you can see that there's a lot of positions entering long here. Then we go up, collect this liquidity here, this one here, this yellow here, which is a 25x short pocket. So this is what we've got essentially. So you could probably concentrate to this zone here once you've got all of this and you've got this, and then bang, another big green dot. So you've just got this red candle here. That would be a good opportunity to close. Now, I mean, this is hindsight, so you can see this happening in the past, but you'll see in the next chart that I show you how powerful knowing this information can be, at least with regards to the scalping. So if you did open up a position here and went to this pocket of liquidity above, it's a nice 7% move, or 6.68. Now, would you take this to the short side? Well, yeah, I mean, look at this. Green dot, big green dot, big green dot. Liquidity's just been gobbled up. So what's the next point to the downside where there's liquidity? We've got here and here. So if you did go from the top here to the bottom, that's another 5.52%. You could have kept holding if you really wanted to, but to be honest, you could have just held to the bottom of this liquidity pocket. So short here, it collected most of it here. So maybe you closed it, maybe you kept it open. This massive amount of volume, but nothing really went anywhere. So there's a good chance that look at these big blue dots. Remember, the bigger these dots are, the larger the open interest amount is. So the volume and open interest is just huge on this candle, but it just didn't go anywhere. So there's a good chance that the price will just come back down, and as it did. So here we are here, all these liquidation points from 150 to 25x. So we basically came all the way down here, collected this liquidity, and that personally would be a really, really good opportunity to take a scalp long to the upside. But you don't have any big red dots here. You do have a lot of red here, a lot of selling. So think about, like, if everyone's sold, who's left to sell? And if no one's left to sell, then price goes up, right? That just makes sense. So if you did, you would go here and you would wait for a large amount of buying, which is this big green dot here, potentially, but the candles didn't quite get red enough, and not enough liquidity is really taken up here. So, say if you just held this and waited for this pocket here, or the 50x pocket, so you'd just be holding, and then even more so, you see this huge amount of selling pressure here. You see heaps of people selling out. They just don't believe this move. They think that things are going to go down. Maybe, we're going to tank down to 13K or whatever narrative's going on. I don't know what caused this large amount of selling en masse, but basically we never really came back down here quite with the amount of selling that was happening here. And then big move up. So we have this big candle here that's printed all of this liquidity. So we have all of these people probably shorting this little pop, and look at this crazy amount of liquidity. Look at all of these lines. There's like nothing below. So you look at the lines below, there's like no liquidity below. It's all above, all of it. Look at all this. all of this, like there's just crazy amounts of liquidations to the upside. So what happens? Well, there's enough liquidity. That's why Bitcoin likes to get stuck in these ranges, because it builds positions. A lot of liquidation stops, all that sort of stuff that builds the momentum that's required for these bigger moves. That's just how this stuff has to work. So that's why liquidity is required in order for the price to move in crazy ways that it does. So anyway, as I said before, again, like I didn't see, you didn't really see what was going on over here, so you didn't really know where you were at. But even if you didn't get in down here, which is fair enough, or if you were still holding or whatever, if you see this crazy amount of selling and price isn't really going anywhere, and you see this crazy amount of liquidity to the upside, the bell is ringing. It's saying, hey, price is going to gravitate to the next liquidity pocket, which is here conservatively, or here and beyond, even if you really want. But here, that would be the close. We just tore straight through all of this. Look at all these balloons going crazy, and that's what caused all of this. But then you see all these really red candles. This is so dark. I mean, you can't really see it like this, unfortunately. Not this one anyway. But yeah, you can see this gets really, really dark red. So the chances of it going up further at this stage, pretty slim. But, and it started creating another range here. So I posted on Twitter this chart, and that was basically where I said it was around here. And I said that there's more liquidity to the downside than the upside, so we're going to probably come down to this pocket. So you can go on my Twitter and have a look. Price was over here, and I said, I think we're going down into this range here, and surely enough we did, because that's how price works. It gravitates to liquidity. Now, anyway, that's that. Big green dots, reversal signal. If you took that as a short, red candle, big green dots, lots of trapped longs, more fuel to the downside. We have so much below still, potentially. So anyway, I'm going to show you the next chart. This is Aggr trade. So I use this for scalping. And I also use its heat map, because I just really like this. Look how much nicer this is. Plus you can see all the active trades across all exchanges for Bitcoin perps. So you've got Binance, I've showed this in previous videos before. We've got OKX, just everything's on there, right? It's got the old OKX logo. This is the old one. I don't think they need to update that. Anyway, and the VWAP bands, which I really like. And I covered those in my last video, so you can see those. And one of the most powerful tools in this arsenal is the liquidations. So once liquidations are all collected, then the chances of us going up any further are kind of slim, while liquidity is built for more fuel. So that's what this is all about. Now, this is much better on the 5-minute chart, and I'll show you why. I use this for scalping, and I'll show you my process. So, this is not financial advice, obviously, like this is just education and maybe entertainment if you find this entertaining. I'm just going to scroll back and let all these candles load so you can see my process. So we're going to start here. I use this for scalping. It's a combination of 3 things. So I look at the stochastic heat map on the 5-minute. I look at all this red, right? So the candles, if you zoom in, you can see the candles are all colored according to how overheated it is. But I also look at just how much red is there across this band, and on the flip side, how much blue there is. So what I look for is 3 things. First strikes are liquidations. Now I look for a large spike in liquidations, right? So for example, I'd be looking for a short here. So I see this big run up, right? And I'm looking for a spot to short. So here, I wouldn't take this because I'm looking at the stochastic heat map and I'm seeing, hey, we don't really have any red. I really want as much red from top to bottom, or at least mostly red on the top and at least mostly orange all the way down to the bottom, right? So top of the band is what we want. So the VWAP band here, SMA VWAP bands. Let me just get some more of these candles so we can have a look-see. Also, yeah, this is the alternative here. So we see a full band of blue, right? And we've got a touch. I took a long here. It was really nice. So I got a signal to go long over here on one of my other trading strategies. And I was asleep and I didn't see the signal. And by the time I saw it, it was over here. So I was waiting for a buy signal, right? So I saw the first thing here. I was like, do I take the long here? No, I want to wait for the bottom of the bands, right? So I waited. The retest here, bang, okay? So also we've got yellow and green up here. So I really wanted all blue because that's completely oversold. So when you look at completely oversold on this, and remember this is Aggr trade, so this is aggregated data. This is all exchanges, so it's very powerful. So we've got blue all the way across the band from the top to the bottom. And we've got a test and a touch at the bottom of the band here. This is an incredibly strong buy signal. And you would take this as a scalp to the next, potentially if you want to the next liquidation point. So all of these liquidations here, plus we're at the top of the bands. So the long would be from here to probably either here, or you just wait for these to sort of stop and you wait for more red. So from here to say here, for example, it's not red across the board. You could go to here because it's just red across the board plus some yellow. But after seeing these liquidations and being at the top of this channel here, that's, you know, might be a good time to close. I actually didn't close my long because I was waiting for 31K. So I didn't quite get 31K, but what I did get was this. So we had a big spike in short liquidations here, which is something I was waiting for. When you look comparatively to this is kind of nothing, you know. I'm really looking for these big spikes, which are in the order of, and I've been trying to write a bot for this, but in the order of 10 million aggregated liquidations, which is just insane. It's just a lot, right? It's just a crazy amount. Over here was 6 million. That's also a good threshold as well. But in terms of taking a short, you really want large amounts here. So you see this big spike of liquidations. So a typical counter trade for liquidations is you see a large amount of liquidations and then you take a short, right? For me, it's take a short in the band and then short to the bottom of the band. Now, if I took this prematurely, I don't know why I would, because I want dark red. I want very dark red. So here we have here, liquidation spike, check 1. We're right in the middle of the band, check 2, check 3. Well, we've got green here. I don't like that. I want more red or at least yellow or orange. So what am I doing? I'm waiting. And it was right here. So if you weren't even looking at price, if you didn't even know what price was, this is kind of like the best way to test this. So again, you can't see price on the screen. So this is how you're actually testing this. So you see a big spike here, right? You go, well, what do we got here? So we got green, we got some blue. I'm not liking this. And then boom, yellow, orange across the entire board, and even some more liquidations here. This right here is where I took my short. Let's see where that was. Right there, top. So that's right in the middle of the bands. Orange across the board, red across, dark red here. Series of liquidations. That's where I took my short. Where did I close? Well, I closed at the bottom of the bands. Where were the bottom of the bands? Well, I was just waiting for this, sitting, waiting. And this was where I closed. So we've got blue across the board. This dark blue pocket here, incredibly strong buy signal, right? So, I mean, this was the volatility from the inflation figures. So this was just kind of noise. Again, you could just go, you could go from here to the mid band if you really want long and then go long or whatever, but this is just not enough for me. So anyway, wait for the bottom of the bands or this pocket of blue here. So you pretty much blue across the board, especially right here. And then you just flip to actually, I don't think this was the inflation data. I think that's coming up. But yeah, so, or you could just wait for the next lot of long liquidations, which would be here. We're just going to the bottom of the band and the next pocket. So blue across the board. I saw this. Again, let's just hide price off the screen. We had a recent series of long liquidations and then this here. So you wouldn't be able to actually see. I'm just going to hide it like that. That's what you're seeing, right? All blue and this dark blue here. That's kind of what you're seeing because you don't have the future data. And this is where I closed my short. And where was it? Right here. I actually flipped long here. So I went for the next swing and I went and closed actually on the next liquidation pocket. So you do have to consider this. And the reason why I closed is because it's also because of this was the inflation figures event. I'm just not so interested in the craziness of those moves. So again, long, and I decided I'm just going to close on the top of the band again, like from bottom to top. That's like kind of the most basic way to do this. It's just from the bottom of the bands to the top of the bands. So where was the top of the bands? First top of the band close was 5-minute candles close was here, plus a massive spike of short liquidations. So if most of the shorts have been wiped out, well, it's time to wipe out the longs. This is how the contrarians think. So close trade there. That's where I closed my trade. I did not open a short because I just didn't want to deal with this. Plus it doesn't, the stochastic heat map doesn't look good to me. So where was the next point? Right here, bottom of the band, dark blue, blue across the board, recent liquidations, a whole bunch. Longs just got wiped out completely here. So if longs are wiped out, then it's time to go long, right? I mean, again, like you didn't see this price before, but now you're seeing it. And you can just see how crazy this is. So you can either wait for the next series of short liquidations, or you can just go to the top of the band. In my case, I went from here to the next series of short liquidations. So short went long here, waited. I want more of this to be overheated. I don't have to worry about some meetings or whatever. Like, you know, that's the main thing that you kind of would avoid. But yes, so held this long position here. I did actually take some profit off because it was quite a large position. So take some profit here, top of the band, but there's really nothing else to indicate that, you know, we're exhausted and that we can't just keep going. So surely enough, we just kept going up, and there we have a pocket of short liquidations, right here. So we got top of the band, short liquidations. I wouldn't take a short here. You'd like somewhere where you'd probably close a long position. This is not good enough for me to take a short trade. And you know, if you weren't in any position, like there's nothing really here that you can work with. You got middle of the band and a large amount of blue. It's a bit of green and yellow there though. I don't really open positions in the middle of the band, but we had a massive spike of long liquidations right here, about 3 million. It's not huge, but it's enough. So middle of the band spike. If you were really desperate, you could go from here to the top of the band and wait for the next cluster of short liquidations. But to be honest, like I just prefer to wait for the bottom. And so yeah, we didn't really have much of a signal to short, to be honest, but we did have a big cluster of short liquidations. So you could have potentially gone here, but it's just not good enough for me personally. I'd rather just wait for a better signal, but you know, it depends on your risk tolerance. I wouldn't do it. So the next long signal for me, right? I closed my long around here, cluster of liquidations, red, top of the band. That was closed there, plus it was 31K, which is what I was waiting for anyway. And that was pretty much that. So did I take a short? No. Wanted to open up a long position. Okay, so you're watching these candles and you start to see them turning blue, large amount of selling. You have a big liquidation cluster here. So this here was 6 million, 1 million, just a cluster of liquidations here, which is, you know, a sign that you want to go the other way. So you're waiting. When you're in the bottom of the band, you're really wanting to pull the trigger, waiting for all this to turn blue. I'm like, I want more blue, bang, right here. Again, as I said, like, if you really want to backtest this, you want to look without price on. You don't really want to see what the price is doing. What you want to do is kind of mentally mark out where you would take the trade. Kind of just like hide this. So, you know, you see big spike liquidations. You're like, am I at the bottom of the band? Like, I want bottom of the band. I'm going to go right to the top of the band. So big spike liquidations. So like, whoa, I want more blue. Waiting. And then you probably go there maybe. Could pull the trigger there. But look at this, it just kind of clears out more. Right there, it's another spot, good spot. This here to me is like kind of perfect. Like if I saw this and I hadn't gotten in already, this is where I would get in. Let's see where that is, right? The bottom. So this is what I mean. So longs wiped out, time to wipe out the shorts, right? And we go to the top of the band. Well, right now, price has not done anything. So if you got in along here, you're pretty much waiting. You're just sitting there on your hands, waiting. The bands are contracting, so we're coming in, like there's really nothing going on. And in terms of being oversold or overbought, well, we do have red candles, or orange candles. Oranges, you know, it's stacking up here, but we don't really have anything going on. So let's just zoom out and look in context. These liquidations are really small, so it's not a lot to work with. And yeah, so if you were in along here, which I am, right here, I don't think I caught the actual bottom. I got in prematurely on this one. So I was waiting for, I think it was like here. Didn't like this light blue here. I wanted like a darker blue across the board. So that's where my position is, around 30,090. And, you know, just waiting. Now, stop losses. I've got my stop loss at break even right now, or a little bit below. So I'm just kind of waiting and seeing how this plays out. Right now we're building liquidity, right? So I think that there's a lot more below, but again, in order to build liquidity, we need like high momentum moves. And those high momentum moves are what suck people into hitting the market buy or market sell position. And that collection of liquidity is basically what's required for fuel for those high momentum moves. So that's pretty much how you trade liquidations, SMA VWAP, and the stochastic heat map. So yeah, if you found this interesting, please let me know in the comments how you feel about this strategy, and give it a like if you liked it. And if you want more content like this, please subscribe and hit that bell notification so you can get notifications on my future videos. And I will see you in the next one. This is Cryptolytics signing out. Have a good one.